Hey guys, I'm really a bit excited to show this trade's post review because it used a concept that I've been thinking about lately, and that to me makes logical sense, and that empirically seems to be working quite well as well. The trade was a 3-minute trade, sell trade on this Swiss franc yen. So the logic was, okay, I've got very strong sellers down, push up by the buyers, sell down again, could not really break the lows, therefore I'm expecting another reaction, move up by the buyers to at least this area. And around this area, I'm seeing that the buyers have some trouble going up. So I'm interested for a sell. Now, I purposely took the sell over there based on this kind of logic. I have a sharp reaction at this area, probably based on this little resistance area over here that coincides with this whole support turned resistance area over here. So this sharp reaction means that there was not much sell liquidity over there. Therefore, this sharp reaction means there was an excess of sell liquidity over there, and that was taken. Some of that was consumed and it went down. And once I saw that on this reaction, it did not immediately go down, that told me that there is no more excess of sell liquidity over here, and that positions have to be built up by the sellers. So that's why I did not hit the sell on the first pullback. That's also because I wanted to see that this support again would have some of the buy liquidity consumed. So this is probably more easy to explain on the 1 minute. Okay, so the reasoning was, I see this slowdown happening at the resistance area, and I know that there are buyers over here, and that they've done a consolidation and breakout. Therefore, I'm anticipating that there is some excess buy liquidity over here. So I should not hit a sell somewhere around here because it's prone to reacting at this buy liquidity area. So I want to make sure that there is no more excess buy liquidity before I take a sell. So once this reaction happens, again I'm seeing some sellers build up their positions. Now I think logically it does make sense to take a sell around here because some buy liquidity is definitely consumed, and especially after this sort of doji or wick type of candle showing that buyers are unable to go any higher given the context of the whole price action. I think it makes sense to have taken an entry over here, but the problem with that was stop loss placement is a little bit difficult. I could place my stops just above here, but I'm just a little bit hesitant and actually scared of placing such large stops. But I know some of my friends who do take entries like that and do very well. So I hope to gradually move towards taking entries to right there once it makes sense in the overall story. But I didn't take my entry there. I waited for these sells to come down, again showing that there is very little buy liquidity over here because the buyers again react and are unable. They are unable to make a high, this one, make a higher high. So once buyers react over here after this sell down, now this sell down, I saw that the sell just stopped and it did not break the low. Therefore, I was expecting one more move up by the buyers. And after I saw that move up, that's when I hit the sell on this candle's way down, because I thought, okay, the sellers have made some lower highs now. The buyers have the support over here has probably been emptied of all excess buy liquidity, so I can probably take the trade. That was my thinking, and my logic for the target again was based on this concept of sharp reactions and or non-sharp reactions. Basically, based on the concept of how much liquidity is there at my target area. Now, I saw that on the 1 minute, this was the support, and this was a consolidation over here, and then a breakout. Therefore, I was expecting some kind of excess buy liquidity to remain at this level. That's why I just targeted that area as my target, because I was just testing this trade was more to test this concept of excess liquidities and how that logic can help us in getting the more precise trades, both entry-wise and exit-wise. Okay, so that's all for this trade. Quite a simple one, but a good lesson for me. Thanks, and comments and questions are very much welcome.